Welcome to my pitch and business consulting and training. This is presented by Accounting Lecture. And I hope that you'll be able to grapple with some of the principles here and that we'll be able to share together. I have 3 packages and you'll see exactly what they are. And you'll be able to, appreciate some of the principles that I put together to build and train and to enhance one's development in terms of personal finance, property investing, and business startup training. Now, I would just like to talk about some dilemmas that one may be facing. Do you have the current dilemma of low interest rate on savings, or the dilemma of low knowledge of finance and accounting and budgets? Or do you have the dilemma of low return on investments, or the dilemma of no clear strategy of how to move forward financially? Or you've lost your job opportunities, or you would like or want to buy a property and don't know what the first step is, or want to start a business but not sure of how to account for sales and expenses. Are these some of your dilemmas? Now, if these are some of your dilemmas, let's kind of look at how we can solve some of these dilemmas that you may be having. Now, we have here 3 courses. The first course is personal finance training. Now, in this course, you are able to get some understanding of the basics of personal finance and investments. And some of the topics are interest rates, future and present value analysis, bonds, long-term investments, stocks, pensions, and much more. And then we move on to the next course, which is on property investment training. This increases your knowledge of property investment, and this can be from anywhere in the world, because the basics of investing in property is fundamentally the same, regardless of where you are. Some people may have a situation where the laws are slightly amended, but the core in terms of the financial principles are the same regardless of where you are in the world. Now, in terms of the topics we're going to look at, they are deposit requirement, fees and closing costs, the kinds of property investments, lease versus freehold or fee simple, yield or return on investment, the accounting principles behind property investments, and much more. And then we have the third course, which is increasing your knowledge on the basics of accounting in terms of business startup. Now, a lot of people like to start business, but they do not necessarily have the tools in terms of the financial understanding of how to account for things in order for them to actually operate their business. And we are able to do that in this course. So you are able to prepare ledgers, journals, income statement, balance sheet, cash flow, budgets, and cash flow statements, partnership accounts, etc. So these are some of the things that we'll be able to go through. We also are going to look at Excel and Xero accounting software, so that if you want to have training on that, if you want to really scale up and actually do something really fantastic, you can do so as well. Now, you might be wondering, why should I make this investment? Why is this investment worth making? Now, I would like to actually share with you some exciting feedback from people who have done this course in the past. Now, the feedback is from people who have read my books, as well as those who have done it in the past, and also people who have taught many years ago, possibly about a decade ago. Now, one of the students, or one of the learners that I've taught some years ago, who's Russian, her feedback was, in terms of reading the books that I've written, she says complex things are explained in a very simple way in the book. It's a great way to understand more about personal finance, property investing. And it is useful examples make it easy to relate theory and practice. So there are useful examples that comes to light in the books and the course content that allows it to be, come to life in terms of understanding the principles. Another feedback from Croswell, who's British, another learner who's a solicitor by trade, and he also, did the personal finance course. He says, I long have thought that it is critical for us to understand at least the basics of finance. So I was happy when I discovered that Sean was teaching it and quickly signed up for it. I have found this course to be enlightening and informative. It has changed the way I see and handle finance. I would recommend it to all and commend Sean for engaging and patient manner as a teacher. So he was highly impressed with the content that was produced, and therefore highly recommends the course for others. And then we have Shirley, who says, again, British, and she works with the NHS, which is National Health Service. She's done the property personal finance course and the property investment course, and also she's done one-to-one sessions. So she's basically had a full range of the product in a way. Says Sean has been very informative. All the concept he has explained were very easy to understand. The information presented helped me to have a higher understanding of finance. Sean takes it a step further and offer one-to-one help for those who want further clarification. By taking this class, you're opening a new door to needed financial literacy. So she sees that financial literacy is important, and you are able to actually open that door, to clarify some of the principles that seems to be flying over your head. You listen to the news, you hear financial terms, and if you go here, in and about, you even read the papers, you will also hear financial terms as well. Now, Malika says she's Canada, and she's one of the learners. She's done the personal finance as well as property investment course. Her background, she's a health worker. She's also an artist, as in she actually paints. She's a painter, and she's a party planner and a decorator. I currently do some financial work using my own initiative, and I want to have some basic knowledge of finance. I've completed a short course with Sean from the income statement to the trial balance, and now I'm over the moon. I have the skills to do this. I thank Sean for sharing his valuable knowledge with me and enabling me to reach one of my goals in a very professional and relaxed environment. So, who am I? My name is Sean Fuller. My background is an MBA in finance, a BSc in management, and a CIMA advanced diploma. I have a level 3 qualification in teaching. I have over 20 years experience in accounting and finance. I've worked at top universities in the UK for over 10 years. I've worked as management accountant for 10 years. I've worked in position as a business analyst, property investment manager, and business consultant and financial advisor for several years. My passion is business, finance, and entrepreneurship. My hobbies are basketball, football, cricket, athletics, traveling, and Bible study. These are some of the things that I like to do in my spare time. Now, let's look at the first course. So we'll be able to kind of grapple with some of the principles here. So the first course is a personal finance course, and it says it is a 5-week course, and it's 2 hours every sitting. Now, the first 2 hours is generally free, and then you are required to pay for the other sessions. So you get £100 discount. So basically each session is £100, so altogether it's £500, but you get a first session free, so it is £400 altogether. And the course is delivered via Zoom on set dates, but you have the option for pre-recorded sessions, which can be given to you subsequent to making the payment. You also have the opportunity to have one-to-one sessions, so up to 2 hours afterwards, where you can get some further clarity on some of the principles taught. So some of the principles are quite, technical in a way, And so you'll be supported via, one-to-one to kind of guide you on some of the principles. Now, in terms of the content, we look at, we're going to look at the basics of investing, understanding the income statement and the statement of equity. Then we move on to equity and investments in terms of share purchase and preference share. We move on to investing strategies, the basics of personal finance, and then we will conclude. Now, in terms of savings, let's look at an example, because I think we can talk about things, but if we don't really apply an example, you might be wondering, oh, what is this? It doesn't make sense. So let's look at this. Savings is putting money in the bank to yield a return over years. For example, Tom puts 1,000 in the bank at a rate of 3% for 4 years. Now, the formula is the future value formula. So the future value formula says the future value is equal to the present value, open bracket 1 plus r raised to the n. So FV is future value, PV is present value, K and R is the rate or interest, and N is the number of years. So in order for us to do this particular question, we need 3 things. First, we need the investment, which is 1,000. We need the interest rate, which is 3%, and we need the time, which is the amount of years. So the investment, 1,000, the rate, which is 3%, and the time, which is 4 years. So once we put that in the formula, it's 1,000, open bracket 1 plus 0.03 raised to the 4, and that gives us 1,125.51. So we can see the initial principal investment is 1,000, and the interest over the period, which is over the 4 years, is 125.51, which is approximately just over $30 per annum, in a way. So let's look at the finance behind it, or the principles behind it. So in the first year, you have $30. The next year is 30.90. And then the next year is 31.83. The next year is 32.78. So we can see that as time goes by, the compounding element allows the initial interest rate, the initial interest return, to move from 30 to 30.9 to 31 point to 32 points. So you can see that the compounding is actually having a higher return over time, as opposed to, the core should be actually 30, and anything over 30 is a compounding element. So we can see here, and we can look, let's just analyze even further. So we know the total interest is 125. The principal is 1,000. So altogether, that's 1,125.51. Now let's have a look at the difference, looking at the compounding elements. So the first one, we can see the difference here is 90. So that's a compounding element being calculated there. The next one, we can see the difference is 0.93. And the next one, we can see the difference is 0.95. So you can see that it's an upward trajectory of the compounding element actually allowing for an increase over the period as time progresses. Now let's have a look at an example. Now here we have 2 different scenarios. One, we have, if you were to put an investment in a UK ISA, currently we have in the UK ISAs, and I'm sure in the US there's also investment instruments as well. We'll look at that in a minute. But let's say you have an ISA and you're getting 0.85% per annum. So that's 1,000. And let's just look at it for a 3-year period. Let's just see what happens. So 3-year period, the percentage is 0.85, and it's 3 years, and the initial investment is 1,000. So if you put £1,000 in over 3 years, you'll get 1,025.71. So pretty much maybe about 8 or thereabouts per year, which is not a significant return on investment per se. But in the US, the interest rate currently on this particular product is 0.01. 0.001. Now with 0.001, It's basically, if you were to calculate that for a 3-year period, we can see here that is 3 cents. So it is actually 3 cents if you were to have an interest rate there of 0.001, which is technically nothing really. Okay, now in terms of property investment and training and course, it is a 4-week course. And this course, so we're looking at course number 2, is 1.5 hour each. First 1.5 hours is generally free. The course is normally for £500, which the first, £600, but the first 100 is given as a discount. The course is delivered via Zoom with set dates over a month, and you have the option of being pre-recorded, having a pre-recorded session, and if you can also have that, but it's also advised for you to maybe also get some understanding in terms of the principles via a one-to-one or one-to-one sessions as well will be provided. But the main thing is that you have a classroom setting, and then you can have up to 2 to 3 hours afterwards to clarify on your principles, and you can get some guidance if you so desire to actually make an acquisition, purchase your own property. We kind of help you with the choice and the financial implications that you may encounter. And now this is just training. The intent is not necessarily to advise you, but to kind of provide you with information, and then you can make your choice. So we're not necessarily advisors per se, but the objective is to just give you the content, and then you can make an informed decision. In terms of the property investment course, it's property investing for households, investing buy-to-let investors, and property investing, the cons or the good news, and ways of investing in property, and the drawbacks to buy-to-let investment. So these are some of the things and the topics that we're going to be looking at in terms of the property training course. So let's just talk about some of the things. So we look at residential property, commercial property, private investor property, and land. So these are the 4 main categories of property. In terms of some of the figures that we may have, and this can change based on where you are in the world. In the US, you have totally different ranges. In the UK, totally different ranges. I'm sure other places like Canada and Australia, and maybe the other places in the East like China and Japan is a totally different situation. And then we have the Middle East, again, totally different situation. But the main core principles in terms of property and acquisition and the development of a portfolio is pretty much the same. So in terms of residential, we tend to have a range of about 300 to 2 million. And this is just for the average person. And in terms of commercial, about 1.5 to 10 million. And in terms of private investor, from 300,000 to 5 million. And in terms of land, it is 50,000 to 5 million. Now we can also look at the principle here of the accounting equation. This is quite an important idea for us to kind of grapple with how finance works, what's the mechanics behind an investment. So if a property is worth 900,000 and the debt on the property is 400,000, the accounting equation is of such. Accounting equation says assets equals to liabilities plus capital or equity. So the asset element is 900,000, the debt element is 400,000, and therefore capital would be 500,000. We can rearrange it another way. So assets minus liabilities is equal to capital, which is the 900,000 minus 400,000 gives you 500,000. Okay, then we move on to the business startup course. This is the 3rd course, and this is a 12-week course, but we have an additional 2 weeks tying up principles, and finally, teaching some additional tools like Excel as well. The main idea is it will be 2 hours per week, but you have the option for additional training of an additional 2 hours. So you're going to get extra value, because some people, even though they may be told to do the practice, they not necessarily do it. are very good at working by themselves. So there will be additional support of an additional 2 hours for you to get training on some of the principles so that you are solid, in terms of building your understanding of the principles. So the session generally, the first session is generally free, and then the other sessions is paid. Normally altogether is $1,500, but you get a discount of $300. It's delivered via Zoom over a 3-month period. And you have the option to get one-to-one towards the end to kind of clarify anything that you so desire to get some clarity on. And provide support in terms of the financial side, so you can do it yourself, really, and then get the support of an accountant to supervise the preparation at the end. The main idea is to kind of do as much as possible for yourself, and then the accountant would then do an audit and and kind of help you with the preparation of the reports, which will then be submitted to Companies House or wherever it is that you submit your various returns. So I think in the US it would be the Treasury, the US Treasury, or the US tax authorities, and here in the UK it's Companies House and the HMRC in terms of the taxes side of it. Some of the topics we're going to be looking at is the types of business and in terms of basic accounting. Then we move on to double entry and accounting equation. We're going to take at least 2 weeks on that. Then we move on to preparation of financial statements. Then we move on to preparation of the statement of financial position. And then we move on to depreciation accruals, bad debt and provision for bad debt, preparing final accounts with adjustments, statement of changes in equity, cash flow statement. Then we move on to cash budgets, partnership accounts. And then in the 14th week, we will look at the review, and then you have the option to kind of get some further skills in Excel. For the most part, we'll try to use Excel throughout. So you kind of will get a better understanding throughout. But if you want to tighten up towards the end, your Excel skills, you can also do that as well. Now, in terms of the content, we would approach it from starting with types of business. So, you have sole proprietorship, which is normally one person running a business. It's a single individual. And then we have partnership. A partnership is two or more business owners. And then we have corporations. And this is a separate entity, legal personality, which is different from its owner and is formed under the law of the state or whatever the country in which it's established. And there are 2 basic types of corporations. You have the stock corporation and non-stock corporation. So stock corporation is like, a bank like Barclays, etc., or UPS, which is, into distributing parcels. Amazon is also another huge one as well. You have non-stock corporations like Virgin Atlantic. You are not able to actually make an investment in a company, but they are a corporation in themselves. And yeah, so you have those 2 kind of formation: stock corporation and non-stock corporation. Then we move on to limited liabilities companies. Now, this is another form of operating a business or operating, your financial operations in a way, and that you have the option that you can kind of block or have people who would like to legally sue you only be privy to the assets that a business have in terms of litigation purposes. But if it's a sole proprietorship, which means that your personal assets is being exposed if there's litigation. So that's good. But then you have a situation where in terms of limited liability, you have tax related challenges, because then you have, I think, 4 or 5 different categories of taxes that needs to be accounted for. You have the VAT, you have national insurance, and you have PAYE tax, and then your corporation tax. You have so these are some of the major tax that you have that you may need to account for. And if you do operations overseas, also you might be taxed as well. So you may not necessarily be taxed internally, but you also may be taxed externally as well. And then we also have types of businesses. We have the service business, and we have manufacturing business. The service business, you just, you don't have a tangible product, but you have, a service that you provide. And then you have manufacturing businesses, where the main thing is you actually manufacture a product, and then you give that to the customer. You give that to someone on the chain who would then actually sell it to the customer. And then we also have merchandising business, which is where you actually buy a product and from that is finished goods, and then you sell it on. So companies like Top Shop and Next, etc. These are businesses. They do have a chain. Actually, they actually connect to the manufacturing side as well as the selling time, the retailing side. But you can see the merchandising side of the business, straight up. I don't think you would see a Next factory in China or Vietnam or Bangladesh, but they do connect with various factories there, get the product, and then sell it on in the UK and other places in the world. Now we can also look at the concept of the accounting equation again. So accounting equation says assets is equal to liabilities plus capital, or asset minus liabilities is equal to capital. So if the owner actually makes an investment in the business, say £20,000, then that increases the asset by 20,000 and also increases capital by 20,000. Now we can also look at, let's say, recording a transaction. Here we have what is called a ledger. It has two sides. You have the debit side and the credit side. The debit is on the left and the credit's on the right. So you have two accounts. Here you have the cash account and then you have the sales account. But let's not jump ahead of ourselves. The main concept is debit is receiving and credit is giving. Debit receive and credit is giving. Now, if we look at this question, it says, James, on the 1st of December 2020, James Retailers sold goods of 500,000 to Mark Brown by cash. So 500,000 was sold by cash. You need to find out what are the two accounts. One, it's a sales account because it says sold goods. And two, it says by cash. It means that we ignore Mark Brown because we don't need to document his name once he actually pays immediately. So one account is receiving, the other account is giving. So the sales account by default is always a credit account. So we know we need to enter on the credit side, and the cash account is a debit account. So we always need to enter on the debit. Well, the cash account is a debit and credit account, which means that you can actually put money and take money out. So it can go either way. But for the most part, the sales account is a credit account. So we enter the date, the 1st of December 2020, cash 500. And then on the other side, we have on the cash account, the 1st of December 2020, sales 500. And notice we have the opposite of the various accounts in each of them. Now, in order for you to actually do this course or these courses, you would need good calculator, ideally a scientific calculator, paper and notes, computer or smartphone, and you also need to have the capacity to download and purchase hard copies of the book, and then practice and follow as we go along through the course. Now, the first course, as I said before, is £500. The second is £600, and third is £1,500, altogether $2,600. But if you register today, you will get it for $2,000, which is £600 savings, and you get all the content and the support that you need to actually be able to build your business immediately from this. You get to improve your personal finance knowledge. Think about doing a property business, and also looking at a business startup as well. So you have all the various skills that you need to actually operate immediately. If you want to contact me, please contact me at businessconsulting@gmail.com. And you could also visit my Facebook page at Business Startup Training and Personal Finance 111-8272-711-0620. So yeah, I hope you like this. Please make sure you get this because it's a good value. It's good value. It's excellent value. And it's from a trained professional who knows how to, build people. I've had good reviews, and, it's excellent content.